Good morning, everybody. This is Robin and Alex again with Ironwood Financial. Today we're going to do a quick video. We want to talk about Roth conversions. And it seems like there's a lot of advisors out there, toting this topic of why you should do this. But let's talk about maybe some of the downfalls.
Yeah, everybody's that we run into is, you need to do a Roth conversion. You need to do a Roth conversion. I disagree. There are times to do Roth conversions, and now certainly is not one of them. So basically, when you're looking at a Roth conversion, you need to factor in a few things. Why would you do it in the first place? Well, the story is quite simple. When you take your traditional IRA and you roll it into a Roth IRA, once you've done that, you never have to pay taxes on that money again. And isn't that wonderful?
Well, it is wonderful.
Well, yeah, it sounds wonderful. But the reality is, when you make that little thing called a conversion, you pay taxes then. Okay, so what we see is lots of people get really excited about this idea and almost nobody does it. Okay, and it's because of that conversion cost. So quite simply, if you take your money out of your 401k and you roll it into a Roth, let's use the example of $100,000, well, you can't use that $100,000 that you just rolled to pay the taxes. Okay, what you have to do is you have to take money from somewhere else to pay the taxes on that $100,000 that you rolled. So as an example, if I want to roll 100 grand into a Roth and all I have is a traditional IRA, well, I take 100 grand, I move it over. That is now $100,000 of ordinary income, which I have to pay taxes on, and it probably bumped me up a bracket. Okay. On top of that, now I need to pay those taxes. So on that 100 grand, let's assume those taxes are $30,000. So now I need to get 30 grand from somewhere. Where do I get it? Well, maybe I still have money left in my 401k or my traditional IRA. Okay, let's take another 30 grand out. What did I just do?
Created more taxes.
I did.
Yeah.
So now I have to pay taxes on that 30 grand on top of the 100 grand that I have to pay taxes on. So now I need to take out a little more. So if I wanted to, actually pay the taxes for my traditional IRA, I'm going to have to take probably a total of $140,000 out of my IRA, maybe more because now I'm in the highest tax bracket possible. And boom, the whole point of the Roth conversion was wasted. So what do people actually do? What people actually do is they convert little teeny pieces at a time. Okay? So a good strategy for Roth conversion is to do what we call filling a bracket. And so Robin, why don't you explain how that works?
Well, I was going to say the downside to this, before we finish and move on, is if someone's already taking an income from their traditional IRA or their 401k, they're taking $50,000 or $75,000 a year. Not only are they taking $100,000 paying taxes on that, now they're paying taxes on $175,000 plus that 30. I mean, their tax bracket's going to shoot up very, very quickly.
Yeah. So what do you do if you're making 50 grand a year and you want to do a Roth conversion?
Right. So we're talking about filling up your tax bracket. One of the things we can do is if we want to make sure that we're taking very little or we're not taking any at all, maybe we want to fill the first 15% tax bracket. Right? So we convert just enough to keep us within a certain tax bracket. That way it doesn't feel like such a big pain.
Yeah, that's right. We have clients who do that every year. They convert $10,000, $20,000, just enough to keep them up to that 15% bracket. Because something people don't realize when you're thinking about Roth conversions or Roth IRAs in general, they love the idea of never paying taxes again. But if you pay a 30% tax to convert it, and normally you're in a 15% brackets, you've just wasted money.
Sure.
Okay? If you're in the same tax bracket today as you will be in 10 years or 20 years or when you take the money out of your Roth, it makes no difference whether it's in a Roth or a traditional IRA because they both enjoy tax-deferred growth. If you pay 15% on the way in or 15% on the way out, it's the same difference. So only do a Roth conversion in two scenarios. One, when you're in a particularly low tax bracket this year compared to normal, or two, if the market is particularly depressed or your investments are depressed. So for example, because in 2009, the stock market was way down, I did some Roth conversions and converted some of my traditional IRAs into Roths, and now they grow up at a tax-preferred rate, and I'll never have to pay taxes on that money again.
No, that's a really great idea, Alex. And everyone's different, of course, but most people, when they're working, they're at their highest tax brackets. I mean, they're making most of their money and they're at a high tax bracket. Most of our clients, it seems like, when they retire, they're not working, they don't have that ordinary income from jobs, and their tax brackets are actually lower.
Absolutely right. Something that we see recently, since they allowed your 401k to be kind of a Roth 401k is we see HR departments advising people, you know what, you need to do the Roth 401k instead of the traditional 401k. That is only good advice if you're not in the situation Robin just mentioned.
Sure.
So if you're going to be doing a Roth 401k, that's best for people who are just starting out their career and aren't making very much money. Okay, so if you're in the lowest tax bracket of your life, you just got your first entry-level position, a Roth 401k is a good idea. However, if you're in your peak earning years, which is where people do the most saving as well,
right,
you certainly don't want to do a Roth 401k. You want to do traditional 401k. Get that deduction today at the high tax brackets, because as Robin said, most of our clients, most of the people we see in retirement are at a lower tax bracket than when they worked.
That's right. That's right. So that's Roth conversions. We bashed on it a little bit, but make sure you do it for the right reasons. If you have any questions for your own situation as in regards to if you should do a Roth conversion, give us a call.
Else?
Yeah, give us a call, 520-318-4600. This is Robin and Alex with Ironwood Financial. We'll see you next time.
Thanks for watching.